Okay, good morning everyone. This is the fourth video on our series talk about analysis on EURUSD. And typically by now what we should be doing is real price study. But if you come here, you can see that one of our higher lows was broken. And the rules of uptrend states that price will continue to be in an uptrend so far it keeps breaking highs and not lows. Once it breaks a low, that is your first indicator that price might be switching. Now I use the word might because sometimes it's what we call manipulation, or sometimes price just, quite frankly, price does what it wants to do. You can never tell the forex market what to do. The forex market tells you what it is going to do, and then you have to listen to what the forex market is telling you so that you can make money. Because the market is not your friend. So where were we? Okay, yes, a broken low. So this low has been broken. So that tells us that we should start preparing for the potential of a trend change. So typically what I would do, if we're in a current price move was an impulsive move, I would go here like this, like this, like this, like this, and then I'll go down to the 4-hour time frame and look for commonalities between these four boxes. What are the common patterns of price movements that occur, so that I'll be able to expect it in the next price movement. Similarly, if price was in a correctional move, I would come like this to look to study in a little bit greater depth how price has acted in the past when it came to correctional moves on the daily time frame, to see, if there are any common patterns that appear. Because any common pattern that appear, if price does it once and then does it twice, like a trend line, you have your first and second bounce, which is what you use to draw the trend line, and on the third bounce, you can take a trade off of it. So similarly, we'll look at the past price movement and see, okay, the first, let me bring it back, and we'll say, okay, in this first blue box, in this second blue box, and this third blue box, price did one particular thing or moved in one particular way that is just common. So then I'll come to the future and I'll start looking for that specific pattern. If I don't see it, I rest. Price can do whatever it wants to do. But if I see it, then I know what to do. Okay, well, since that's not the case, we'll just go down to the 4-hour time frame and then we'll check out the market structure on the 4-hour time frame and see if there's anything that we can, and see if there's anything anything noted about that. So you can see that there's a bearish structure from here. Impulsive, correctional, impulsive, correctional, impulsive. Let's make it red because it's a bearish move in the 4-hour time frame. Then from this point, you can now see that price is going impulsive, correctional, impulsive, correctional. To be expecting a new impulsive, right? And we'll make it blue. So let's delete this one because that's previous correctional. And now we have a new impulsive move here. So what is common? What happens between impulsive correction, impulsive correction, impulsive? What is one thing that keeps happening? So let's use the line chart. I can see a W pattern here, but I switched to the line chart so that you can see the W pattern I'm seeing as well. Right? You can see the W pattern there. You can see another W pattern here, although that one is not as clear. But if we switch back here, you can see another W pattern. This W pattern ends with a bullish engulfing candlestick. The same with this one, a bullish engulfing candlestick. If you want to have a W pattern here, and this one has one bullish engulfing candlestick sharp, but it's a bit shoddy. You come here, let's use the line chart. You can see a W pattern here again. So we have another W pattern here like this. So at almost every correctional switch into impulsive move on this lower time frame, on this 4-hour time frame market structure, we can see that a W always precedes a move. A W precedes a move. A W precedes a move. A W precedes a move. So what we need to do now is to wait for a W to appear. You see that you can, through the line charts, you can see that a W hasn't appeared. Like if we move this one away, you can see that there's no W that has appeared. So what we are doing right now is waiting for a W to appear. Once we see a W, then we can enter the trade. We can go long, and we can go long with a considerably high confidence. Of course, this is my risk is just a rough risk reward because our W has not appeared. When our W appears, the specific the specific region that prices out will determine exactly how our stop loss and our take profit will look. But this is just a rough, so that I know to keep my eye on this region, expecting a W pattern to appear. So that's it for top loss analysis on EURUSD. This is our fourth video, lower time frame real price study, I suppose.